Good morning. Happy Monday. There's a few things kicking off already this morning, so there's a bit to get through. For anyone that obviously subscribes to the newsletter and had that come out, you'll know the bulk of what we're about to run through this morning. However, like I say, it's always good to see it and understand what the thought process behind it is. First up, Euro USD. Obviously, here on the 4-hour time frame, we started to see a kind of little bit of a dissension, and we're starting to see the same thing come into play at the moment. You can run that little trend line through here. However, not overly banking on the fact that the US dollar is planning to become the strongest currency in this pair at the moment. Very much looking for the fact that we've seen this higher high created, higher low coming into the 30-minute time frame. If we come out to the weekly time frame, you can see that last week presented us with a reasonable amount of buying pressure to come back in and drive price back to the upside. Daily doesn't give us too much to go off apart from consolidation. So as we come into the 4 hours, obviously we're seeing that consolidation again. We've got this little range. If we were to extend this level all the way out, run across those through just for ease, you can see that we've got range lows and this consolidation period that we're sat in between 2180 and 2060. So that obviously is for us a area that we need to be mindful of, and this 2120 level is obviously acted as support previously as well. So for that reason, obviously, it has been included as a potential level to watch out for, just because we have seen it act as support before. So a break or rejection from this level would clearly signify to us that something is about to happen. As the European session opened this morning, we've obviously seen a large push and fresh flood of liquidity to the downside. I'm really sorry, I just have to flick through a couple of positions here. Pretty sure I'm about to be stopped on that dollar CAD, but oh well. So yeah, this 121.20 level, or this little zone that we've got through here, presents us with opportunities. I'm not entirely comfortable taking this short until such a point where we were to come back down, retest the 21.20 level, and then go to the downside. This little momentum, this push that we've seen down, it doesn't overly fill me with confidence. I feel like we're probably very much likely to come back to 121.20 before we see any real downside push, if that's going to be the case. Obviously, rejection and a pop back above kind of 21.30 at this point would probably give us the entry for the long back to 21.70. We would look for that long, for that 21.70 to break though. I would be looking, if we were to reject from here and to create fresh highs at 21.70, I would be looking for a breakout to the upside, with 22.80 being our preferred target there, back into previous highs that we've seen through here. So it just remains to be a little bit cautious at the moment. A break back down, I would really like to get back below the lows if the short is going to be the option. If not, then a break back above the highs. Take a long from 21.20 or 30 or whenever we get a decent close. Back up to 21.80, 22.80. Obviously down to 20.50, and a break below that would take us to 119. There's nothing to really stop us from reaching 119. We've got a little area around 120, got a little area around 119.50. Either way, by that point, we're nicely in profit. So all we simply do is take our position risk-free. For this at the moment, for current price action, I'd want to see a push down to 21, maybe 21.90, create that fresh low, and then come back up and give ourselves a new swing before entering. I think entering at the moment would be far too potentially risky. It just doesn't particularly bode well. I believe a lot of this is stemming from just some poor euro data that had come out this morning. Let me just check to be double sure, but I'm pretty sure we had PMI data out throughout Germany and things, and that wasn't particularly positive. Yeah, German retail sales was down quite heavily. Spanish PMI down. So it's more of the fact that the numbers differed so much. So German retail sales, for instance, was forecast at -2. It come out at -9.6. So when you get such drastic differences like that, even on low impact fundamentals, it can cause a few ripples. And obviously, we're just seeing some fresh liquidity coming from the European session. So I've definitely been stopped in that now. I just need to check my emails, make sure that has. Yeah, that's fine. No worries. -0.25% down. So 0.25% risked for what was potentially a massive position anyway. So not too bothered about being stopped out on that just yet. I will take the same trade if it presents itself and we see the drop back down again. Euro yen. I prefer the long. I would like the long above 127.20. However, as we've already spoke about in the newsletter, the potential for a pullback is obviously quite large, and coming back into this zone where we've seen previous highs before, so anywhere between around 126.50, makes a lot of sense because we've seen such a large momentum push to the upside that before we get involved in a potential long, it seems far more likely that we're going to retrace before we push back into kind of any upside movement. So a push down into 126.50, not overly interested in taking the short, just because there's not really risk to reward there. You're looking at a 20 pip stop loss for, we're saying, at most a 30, 35, 40 pip gain. So a 2-to-1, but that's not enough for me to want to take this type of position because you're not guaranteed that that's where the lows are going to come into play. But the long above 127.20 at the moment definitely makes a lot of sense. Shorts, not going to be interested in until 126.50 goes. Not even against the fact that we might pop down a little bit lower into these highs, so the 30 or 20 level. So until like 126.20 goes, there's not really a great deal of point at looking at anything else. You can see where the lows are here, so 126.20, 126, that level. Until that goes, no point considering shorts. Attention is firmly focused around 127 and 127.20 for those potential longs, or the rejection away from 26.50. Dollar CAD. I did take a short on dollar CAD with the rejection away from 80 that we saw earlier on this morning. That's clearly gone against me. I dropped a quarter of a percent. But at the end of the day, the target that we have on the pair, 126 is obviously an area that we need to be mindful of. As we look out onto the 4-hour time frame, you can see that back down with these lows. We need to definitely be mindful of this area, but there's so much scope for this pair to drop further. Once you were to go below 126, there's nothing to really stop you. Come out to the daily time frame. You've got your 126 region around the lows of here. Once that goes, you can see that you've only really got a region at 125 and then 124.50. So there's nothing there to stop us once we get below. It's a huge risk to reward position, and when we drop, if we drop, I'm not saying when, but if we drop below 27.80 again, then I will look to take the short. As far as long positions go, I'm not particularly really looking at long positions at the moment. I think you'd have to get above 128 and then maybe you could look for the potential at 128.80, 129 maybe to be tested. Come out to the 4-hour time frame. But the fact that we've created this lower low on the 4-hour time frame, as opposed to these lows, is obviously a nice indication. The hourly started to see that formation come in. So if we break back above 128.30, then potentially take long positions up into 129 in the previous highs. Back up here, but until then, there's nothing overly screaming that this is to go long. I just want to have a look. I'm pretty sure, yeah. So we've got US dollar PMI data out at 3 o'clock this afternoon. That's probably likely to come in a little bit over. So we might still continue to see pushes up this morning. But I think as things stand, 128.30 needs to go for potential long positions, and back below 128.80 at 127.80, I will be certainly looking for short positions, targeting back down to that 126 and 124.50 regions. The risk to reward potential is too much to not want to take the position, and I'll probably keep taking it until it pays off. I like the analysis behind it. Aussie CAD, we're seeing the Aussie dollar pump up in this half an hour window, but we had started to see that fresh low that fresh swing start to form after the gaps last night. I think as things stand, I'm still content with the range trading approach to this. If we just now we've moved the chart, it's not going to show it. We've got a little range that's coming through this region here. I'm going to have to move the chart because it doesn't make much sense else. So we've got this little range situation coming into play. So if we get a decent close above, then I'm quite content to take the long back up. It looks so horrible when you move the chart, doesn't it? So a decent close back inside, probably looking at about 97.80, 97.90 at this point. And I'll certainly look to ride that wave back up into 99, I believe the level is. Thereabouts. It's 99.20 on here, but you can definitely see around this area at 99 that is where we would want to be looking. So I'd be relatively content to take the position to 99. It still leaves a decent risk to reward potential on the table. So happy days. However, obviously, if we break back below, I've now got an alert set at 97.60. If that happens, then you can come back to the 4 hours. See where we've got the next potential range forming. This isn't actually a range. This hasn't been used as a range between 96.20 and 97.70. It's not been used as a range, but I can well imagine that it's about to be. You can see previous highs through this region at 96.50, that kind of area. So that needs to be mindful of. But apart from that, we either take the long above 98. I'm fairly confident it's going to be 98.30 by the time we actually get it, or 97.90 by the time we actually get into a position. What's these lows? Yeah, so 97.90 before we actually manage to get into a position with a decent entry, back up to 99. Or below 97.60 will give ourselves, or even if we see a decent rejection away from this level, I imagine we're going to sit in consolidation until about 10 o'clock, then see the break back below or above. Either way, we've got options either side. Aussie New Zealand, some, I hope most of people will still be involved in this from last week. We got a lovely position and we were just flitting around and holding it, not really doing anything. We've now seen that push down with about 100 pips in profit on it. Two options with Aussie New Zealand. Firstly, the same as Aussie CAD, we see that push back to the upside. Fire somewhere into 106.80, back into these previous lows, or 106.60 into these lows. And then we see price continue. If we can get in a higher entry up here, then obviously that would be the ideal situation. Tighter stop loss and a better risk to reward profile for us. So that would be the ideal scenario, is to see that push back up before coming back down. However, that's not guaranteed. And given the fact that we have already revisited this area with this swing here, maybe not the most probable scenario. However, the 4-hour picture does kind of create a different story, indicating that we probably do want to come and see a swing into that area. So we need to be mindful. We just need to watch and see how things progress and how things go. As things stand though, if obviously we see a breakout and close, and we are purely looking at this point for a breakout below the retest and close below 106.30, 106.28, then obviously from there we will look to continue our position back down. Once we get through this region, this is our last sticking point before 105.60 and 105.50, that kind of zone, before we hit that target in at 105. Again, it was another like 15 to 1 risk to reward position. So a silly position not to take, a silly position not to just sit in and wait out for as long as is humanly possible. If we can get an additional entry now at 106.30, 106.20, that kind of area, or at 106.80, then happy days. I will also, if we get the higher entry, I must point out, then I will also still be looking to add an additional entry at 106.30 anyway. So if we do get in here and then we do break below the lows, somewhere around this region, then I'll be looking to add an additional short position too. Pound New Zealand, this is actually only up because I just wanted to quickly have a look at it. Let me just get rid of these. We're not living in past glories. I do still, this gap needs to close on 190 needs 190.50, 190.40 needs to be retested. That will happen, and then we'll see where the price goes from there. I'm not expecting too much from the pound, just because obviously, until kind of Tuesday or Wednesday, as some things start to come out around the monetary policy, what we can be expecting from that rate decision. I think that's a foregone conclusion that that's not changing. So we will just have to wait that out and see how things progress and how things go. With regards to this, a push down into 190 and then the rejection away, I'm more than happy to take the long back up 200 pips. If we break back below, then I will take the short down to 89.20 and then 88.50 after that, back into these lows. So plenty of options. The reason that this chart should be is New Zealand yen. We're looking at New Zealand yen. We're very much caught in a little range at the moment. You can see highs and lows through this region, and so all we're looking at the moment is either to range trade this up and down or to look for the potential breakouts. The breakout to the upside is obviously the preferred option. It goes nicer with Aussie New Zealand, works well with the potential Euro Yen breakout to the upside also, but we shall have to wait it out and see how things move. Nothing's a foregone conclusion. Rejection away from 75.60 will obviously see us push down to 74. But you can see from last week's close that we're still very much seeing buying pressure come into this. The daily time frame gives ourselves indication that we're still seeing buying pressure come into this, and we're just range trapped. So anything between this range bound activity is going to give ourselves the potential options. If we break to the upside, we're not going to be able to see it. It doesn't look very good there, but when we break to the upside, we're coming into 176.80, 177, that kind of region, back into these previous, this previous area through here, the previous highs that we've seen. We do need to be mindful of the 76.20 region, but by which point would be 70 pips in profit and potentially probably risk free. To the downside, if we pop out of 74, then we're back inside of this previous little range. So obviously we need to be mindful around these previous lows at 73.20. However, targeting 72.80 makes a lot of sense. Again, we'll be well risk free by the time this position comes in. If we need to take profit, then we'll take profit. If not, then we will let it run. So like I say, a lot of information, a lot to go through. Probably worth watching it back and familiarising yourself again. However, those are the levels. That is what I personally am looking and waiting for this morning to see how things progress. Aussie CAD, you can see that we're starting to reject. Aussie New Zealand is probably doing the same. Those two potentials could set up quite quickly. We've seen that push into 90. We'll see how we act now. I mean, that push back into 20 is almost a given, so what alerts have we got set? Just give it a look. Give it a look. So yeah, there's. Not really that bothered by that. I'm already watching that. I do just want to have one little quick scout through gold. I haven't really analysed. Oh, what a nasty spike that is. Jeez. What's that saying on the 4 hour? Just get rid of that because that ain't relevant. We keep that in place. Just gonna move up to the highs there. I want to keep this. I don't want to keep that. Ooh, that is a nasty spike. I'd be well inclined though, like if for those that are a little bit more gambling, a little bit more risk happy, there's definitely the potential to take a short position there. Why has that happened? I suppose we've seen the US dollar gain a little bit of strength, but defo the option to take a short, I would probably have a 50 pip stop loss. 250 pips at 5 to 1. It's risky. 50 pips isn't a lot on gold. But there's certainly the option to take that for sure. I think even, in fact, I think I might take it below 81.60. If we get that drop below, I'll probably look to take that position. Risky, but probably just put 0.5% on that. See what happens. This was rushed. This was silly in hindsight, but thought we might see the potential. I would like to see a lower high form before seeing that push to the downside. But yeah, Aussie CAD, Aussie New Zealand, they look both promising to set up at the moment. Euro dollar, we'll see what happens. I quite fancy the short there, but we'll see what happens. I think Aussie CAD and Aussie New Zealand are where our focus is going to be this morning, turning towards potential entries on those. New Zealand yen looks a little way off before that's ready. But yeah, I hope everyone has a decent morning. I've got to shoot because I've got some phone calls to make this morning. But yeah, I hope everything goes well. I'll be about in about an hour's time for any questions or to run through some bits with people. But apart from that, I hope everyone has a decent day, whatever it is you're up to. Have a decent week, and I will catch up with people later.